A market update for the real estate market here in Lafayette and West Lafayette in Tippecanoe County. We're starting to get some movement here in the market. I am Geoff Gooch with the Russell Company, powered by App Properties, and if you're interested in home here in the Greater Lafayette area, I'd love to help you buy or sell your home, your investment home, pick up an investment portfolio. But go to the LafayetteReal.com/YouTube and fill out that form. Hey Jeff, is the market crashing? Hey Jeff, can I get something for a steal? Our local market continues to be strong. We're seeing some movement in numbers, and I'm going to talk a lot about, like, is this a blip in the data, or is this the start of a new trend? And we'll know in a few months, because real estate is cyclical. It's seasonal is really the right word. It's tied to the weather. The colder it gets outside, there's less real estate for sale. That's the way it goes. And you can look at charts time immemorial about that. But let's do a real estate market update for Tippecanoe County here in October of 2025. We're going to start here in October of 2025 with inventory. And this is the big one that I want to talk about tonight. And we're going to have to put this in context with all of the rest of the data. But remember what we talk about here. And I'm looking at a 5-year look back. A lot of the charts that we look at will look back over the previous year to really show you those movements. But I really wanted to put tonight's numbers in context of what has come before. And tonight we are looking at total inventory. This is average daily inventory of homes for sale on any given day. And in September of 2025, that number was 384. If you have watched the show ever and ever heard me talk about balanced markets here in Lafayette, you've heard me toss out the number that in a balanced market there should be 300 homes for sale at any given time. Anything less than 300 is a seller's market, and anything more than 300 is a buyer's market. And the reason that I want to spend so much time on this chart specifically is look at this line. This is 300. We crossed it in about July. So about 3-ish months ago or so, we crossed north of 300. And that's the first time in more than 5 years that we have been there. And you look in the doldrums, they get down into the mid to low 80s in the middle of winter. Wow, Jeff, we're moving back to a balanced market. We might even be moving to a buyer's market where I can ask for discounts off of houses. I'm not sure that's true just yet, and I'm not sure I wish that's true or not, because I represent both buyers and sellers, and so what's good for one is not necessarily good for another, but data is data. Two things. One, in talking with some colleagues, that 300 is perhaps a little out of date, maybe a decade or more out of date of what a balanced number should look like. I think that the number is something along the lines of perhaps 400. Now, that being said, look at that number, September of 2025, 384. So we're almost at a balanced market using that 400 statistic. But the other thing that we have to talk about, though, is the rest of the data. This doesn't stand, this chart does not stand alone. That 384 homes for sale at any given time in September is not the only point of data. Oh my goodness, homes aren't selling. Well, let's dig into that a little bit more. As a matter of fact, I'm going to open this window and another window so I can keep this reference in front of me. Give me half a minute here. Okay, get that one open. Hey, closed the wrong one. As we continue on through our market update here in Tippecanoe County in October of 2025, the next number that we have to look at is new listings. Check out the numbers. There must be something going on here. If we look back seasonally, we can look, new listings go up through the warm months through June and then come back down December of 2021. Here is May of 22. December of 22, we can see these peaks and valleys. The amplitude is getting a little bit smaller as we go along the way, but that pattern continues. We hit the low point in December of 2024. And it climbs to May of 25 and hits the peak. It's got a little, but that peak did get a little bit higher than it had back in 24 and 23 and even in 22. The last time that we came in just under that 21 was in May of 2022. So really, we're just getting back to like what it looked like 4 or 5 years ago. And if we zoomed out to 10 years, like we would definitely see that mountain like came down. The trend line has been down over time. So it's edging up. There are slightly more homes for sale. That is part of what's driving like what the market looks like right now. It's not just, oh, homes aren't selling, they're sitting on the market and more homes coming on the market. More people have sold than have been selling in the previous months and years. And it's because I say this all of the time. It doesn't matter what the interest rate is. It doesn't matter what's going on in politics. It doesn't matter how long you've lived in a house. It doesn't matter. There are just so many things that just don't matter. People have to move. People die. People are born. People get married. People get divorced. People have kids. People's kids go to college. People get new jobs. They need to move to a new state for the new job. People have to move all of the time. Sometimes people choose to move. Yes, I have a friend who chooses to move like every 18 months. She's crazy. You know who you are. I love you, but you're crazy. Most people don't move for fun. Most people. Some people do. But people have to move. And at some point, all of those other factors just become the background noise. Interest rates 6%. You know what? If you were 22 years old when you graduated college and it's been a few years now, guess what? The interest rate's 6%. Still a few years on. That's just your reality. That's just what the interest rate is. Is it going to come down tomorrow? Boy, I'd own a lot of homes if I made money every time somebody asked me or told me, as stated, the fact that interest rates are going to come down tomorrow, next month, the next whatever sort of things. So it's just reality. But continuing on with like, what does the market look like, and the fact that we have these 384 homes for sale in Tippecanoe County when a balanced market might be at about 400. The next number that we have to look at is total closed sales. And these are sales that got to the closing table. You signed your name a million times over and over and over and over again. And finally you own the home. In September, it was 175, almost flat with the 177 in the 2 months before. And this is, again, the pattern is up and down with warm months and cold months. And if we look back over a 20-year and 10-year look back, those patterns happen and we continue to drift down in the totals, but the pattern stays there. And we're actually above the pattern. Check it. I'm going to go, the low point, September, is the, let's say, first quarter to halfway point of the downturn, of the seasonal downturn in all of these preceding years. This year, we've been flat since May, basically. So we climbed and then we have stayed flat. The number of homes that are closing every month is almost exactly the same. We're up 56% over last year. We're still down 29% over 5 years, but we're up 56%. We're almost flat. So we're selling almost the exact same number of homes. It's just that there are more homes coming on the market. Now, those people that are selling their homes, that means that a number of them are leaving the community, because it's not a 1-to-1 ratio. If you sell a home, then you're going to buy a home for the most part. And if everybody just stayed in the community, then it would be the number of sales and the number of buys would be about equal, with probably slightly more buys because people buying their first homes. But that's not the way that life works, right? People buy a new house in a new community and move somewhere because of a job, because of family, because they've fed up, because they don't want to live next door to you name the thing. The number of sales is almost flat since May, June, July, August, September. For 5 months, it's been relatively flat. It should be slightly decreasing, and it's not yet. It will. It is right now as we speak. And the data will show that in a few weeks. So just more homes are coming on the market. More homes are coming on the market. And I'm going to continue to preach that and reiterate that as we get through our last few charts here and then get ready to call it a night. Because, man, I've just got a lot to say tonight. What happens when you don't have a show for a few weeks? Days on market. I love talking about this one. This is the number of days from the time that your house goes on the market publicly, I am for sale, to I have an accepted contract. I have an accepted offer. This is not the closing table. This is not money has changed hands. This is, yes, I agree to the terms of your sale. I love talking about West Lafayette and how it was down to 2 and 3 days. You put a house on the market on Friday, be sold by Sunday. This is all of Tippecanoe County. In September, it was 23 days. 3 weeks. It's a really long time in comparison to the low averages of 5 days back in April. And if we look back, the low point was in April of 23, where it was 2. Again, this is all of the county. This is not just Lafayette or West Lafayette. This is all of the county. 23. 3 weeks and 2 days. That's a long time. I would put it as it's a realistic time. Going back to what I'm talking about, the 300 homes, and it might actually be 400 today. In the past, the averages, the medians were around 28, 29, 30 days, somewhere about a month. So historically, and I'm talking over 10, 20 years by historic, I don't mean ancient Greece, the better part of a month. Put your house on the market and you get an acceptance offer about a month later. We've just gotten so used in the last few years to this really hot market. Now we're just adjusting a little back towards normal here in the winter. And I anticipate it could go up a little bit more and will go up a little bit more. Again, everything we talked about, politics, national issues, that does play into it. But if you got to move, you got a job, you got a kid, you got to move. And it happens. Where will it stop? Again, I don't have a crystal ball. So don't go gambling on any of this. I think it could possibly drift up to 30 days to a month. I think it could possibly drift up even a little more than that. I think it could drift up to 40 days. It could be more, could be less. But what we're seeing right now, I don't think is out of trend with what we would expect to see in a normal market. And what we have seen in the last half a decade, in the last 5 years, is nothing like a normal market. And a friend of mine loves to use the analogy. It's like we were speeding at 80 miles an hour in a 60 mile an hour zone. And now we're speeding at 70 miles an hour in a 60 mile an hour zone. We're still speeding. We're just not quite as illegal as we used to be. Months of inventory, this is just a quick one, just reflective. Again, it follows the pattern of everything that I've been talking about. And that is, if no other houses came on the market today, how long would it take us to sell through the current inventory? We're 2.5. Again, we're approaching historically what we would call a historically balanced market, somewhere around 3-4. Again, with the number of people in our community now, the size of our community, the number of jobs here, the amount of development here, I think that like a 5-6 would not be statistically uncalled for, would be statistically out of line. So will that continue to drift up? Yeah, I think so, but I don't think it's an unhealthy number. I think we are approaching a little more balanced, and the next numbers that we're going to look at will start to bear that out a little bit, where I've been saying that we're in this healthy market. The market's not cracking. It's heading towards balance. Could it tip either way tomorrow? Yeah, I don't know. Could. Sorry, my kids are being very vociferous in the background. Yes, this is my home studio, if you hadn't figured that out. Wrong screen. Median sale price. This is the median price paid for homes across all of the county. I don't think that this tells a whole lot because home values always go up. Will they always go up? There's no guarantee. Is a house an investment in the same way that a stock or a bond is? No. Can you live in a stock or a bond? No. But there's only been 3 times in the last 80 years that housing has retreated in price. And I believe 2 of those 3 times that the housing prices were back up within about a year. Did not take long at all to restore back to previous levels. So there's no guarantee, but the median price in September was $298,000 to $250,000. So call it $300,000. We drifted just a little north of $320,000 earlier this year, but you can see these patterns are a little less pronounced. The gets a little wider, gets a little lower in the winter, goes up a little bit in the summer. That amplitude is not quite as wide as in some of the other statistics, but we were down around the 2s around half a decade ago, and now we're hanging out around the 320s. There's no evidence that, I'm going to buy when the houses get cheaper. Would you like your house to get cheaper? Do you want me to sell your house for less? No, I don't think so. I don't think home prices are crashing. Finally, the last number I wanted to talk about is not on this report. Let me pull up another report real quick that has it. Tippecanoe County? Yep. Percent of list price is the last one I wanted to look at, and then we'll wrap up. Almost got it. Median sale price as percent of list. And this is just a 1 month look back, but it will tell the story that I needed to tell. I don't have this one quickly in a 5-year look back. This is, how much did you ask for your house? and how much did you actually get for it? And we'll see in September it was 95.6%. The expected range by the statistics is between 95.4 and 97.4, so it falls within that. It drifted down from a high of 99% in just a little north of 99.2% back in May. But it's been hanging out here for a year in the 97 plus percent, 3% off. That is closing cost assistance. That is down payment, well, not down payment assistance, but repairs, that sort of thing. Those are incidentals. That is compensation. Those are things like that. That 3%. Those are the sorts of things that we're negotiating about day in and day out, and totally expect 3% to come off of the price to account for things that the buyers are asking for. Because in a real estate transaction, sellers are holding the asset. They're holding the thing that has value. They own the house, and that's what everything can be leveraged against. So whether you're the seller or the buyer, buyers aren't coming to the table with pockets full of tens of thousands of dollars. Neither do sellers in most cases have tens of thousands of dollars sitting in their pockets. It's all tied up in that real estate. So the seller has it. The buyer's paying for it through interest on the mortgage. So that 3% just represents that little bit of negotiation of like, need to help pay for this, need some closing costs, got to pay for that, and a little bit of repair. We expect 3%. That's a normal number. I'd say anything much more than 3%, you're starting to get into negotiation, like true negotiation territory, not just like the normal, like, hey, you know what, here's 100%, we're offering you 100%, and we need some assistance with that. That's almost like de rigueur at this point. Not at 100% of transactions by any means, but in a lot of transactions, that's just like, yep, good broker or good agent's going to look at that and present it to their seller going, they're offering you a full price offer and they're asking for help with this and it's within this range, and that's completely, that's the way the market works. Again, the seller holds the asset, you have, that's what gives access to the liquidity to help grease the wheel and pay for all of these things. Once you get past that, about roughly 3%, and in some cases 4, 5, and 6%. Once you get much past that, then you're starting to talk about like negotiating, about like, you know what, I'm not going to offer you 100%. I'm going to take a couple $1,000s off of my ask, and I'm also still going to ask for that closing cost assistance. And so we see, again, a point in time, 95.6%, 4.4% off of the ask price. This is the beginning of the tail end of the data where I said that we're seeing more homes come onto the market, but the same amount of sales are happening. Because of that, buyers now have a few more options in front of them at any given time. It's not quite a buyer's market yet at getting 95.6% as opposed to 97, 98, 99%. We're talking about really small moves here. On a $300,000 house, a percent is $3,000. It ain't nothing, but it's not a ton either. We're heading into the colder months. Again, all of the trends always follow that. So is this just part of the trend and everything will go back? Come talk to me again in April, May, and June, and we'll know a little bit more. I don't expect it to crash out tomorrow. It could also crash up and go the other way. The market could constrict and people could stop selling their homes. There are a lot of couldas out there. There's no guarantees. But right now, we're just in that territory. Maybe this will become a little bit more amenable to buyers as opposed to sellers. But it's just such a moment in time that we don't have enough data to say yes or no to that either way. But if you're one of those people that needs to move, wants to move, or wants a new home, wants to sell a home, wants to buy an investment, go to the LafayetteReal.com/YouTube and fill out the form. And I'd love to be your local Lafayette real estate resource of choice.